Gold and silver price forecast. Fed minutes put breakout levels in focus. While a weak U.S. jobs report temporarily cooled expectations of an imminent Federal Reserve rate hike, sparking a modest rally in gold, the precious metal remains vulnerable to future losses. Fed Chair Kevin Warsh's firm stance on strictly curbing inflation suggests that interest rate hikes could still be on the table later this year. Investors are now turning their attention to the upcoming ISM Services PMI and the latest Fed minutes. If services inflation remains high or the Fed minutes skew hawkish, Treasury yields and the U.S. dollar are likely to surge, putting renewed pressure on gold. Technical outlook and key levels. Daily chart, rebounding from major support. Spot gold is currently bouncing off a robust support zone between $3,900 and $4,000, specifically testing $3,950. This zone aligns with the support line of an ascending broadening wedge pattern that gold broke below back in May 2026 at $4,500. Immediate resistance, $4,260 defined by a descending trend line originating from the March 2, 2026 highs. The recovery path, $4,400 to $4,500 clearing $4,260 opens the door to $4,400. A further break above $4,400 will push gold toward $4,500, where its 50-day and 200-day simple moving averages, SMAs, converge. The bullish target, $5,000 reclaiming the 200-day SMA, $4,500, would signal a macro trend reversal, setting up a potential rally toward $5,000. Momentum. RSI. The Relative Strength Index indicates that this current rebound is crucial for maintaining market health. However, a drop below $3,900 would invalidate this support and likely trigger a sharp sell-off down to $3,800. 4-hour chart, short-term breakout watch. On the shorter timeframe, gold has established a firm floor at $3,950 and is actively testing the immediate $4,260 resistance level. The $4,500 region remains the ultimate pivotal zone. Gold must first clear $4,260 to sustain its corrective rally, while a breach below $3,900 will hand complete control back to the bears. Silver market rebound eyes key resistance amid mixed economic signals. Silver edged higher alongside gold, lifted by a weakening U.S. dollar and cooling expectations of an imminent Federal Reserve rate hike. However, silver faces a unique challenge. While precious metals demand remains robust, silver is heavily exposed to industrial manufacturing. If weak employment data sparks fears of a broader economic slowdown, industrial demand could stall, capping silver's gains. This divergence was evident last week when gold formed a strongly bullish hammer candle, while silver's rebound remained comparatively muted. Market momentum hinges heavily on upcoming economic data. Investors are closely watching this week's ISM Services PMI and the Federal Reserve minutes. A hawkish tone from the Fed could revive rate hike fears and trigger a sell-off, whereas confirmation of a pause could extend the current rally. Technical outlook and key levels. Daily chart, rebounding from major support floor. On the daily chart, spot silver has successfully defended the lower boundary of its primary support zone at $55. The accumulation zone, $45 to $55. As long as silver remains above this critical long-term accumulation range, the macro outlook remains strongly bullish. Immediate resistance, $64. The current rebound is targeting $64. A failure to clear this level will likely result in another retest of the $55 support floor. The bullish target, $72 to $90. A decisive breakout above $64 opens a direct path to $72. Clearing the pivotal $72 level is essential to confirm a long-term market bottom and unlock a major rally toward $90 and beyond. 4-hour chart, rebound needs technical confirmation. The short-term timeframe shows silver pushing toward the $64 resistance level, which aligns with a descending trend line originating from the August 13 highs. Oversold bounce. The recent upward move was largely driven by extremely oversold conditions on the 4-hour indicators, meaning the rebound still lacks broader confirmation. Crucial pivots. if the price fails to break past $64, the bounce will fizzle out, exposing silver to further downside back toward $55. Conversely, clearing $64 shifts the short-term target to $72. The $64 level is the immediate gatekeeper for silver. A breakout confirms sustained momentum toward $72, while a failure to clear it risks a drop back to $55, especially if upcoming Fed signals lean hawkish. Thanks for watching Financial Round channel.